Hello everyone, welcome back to our channel. If you are coming first time to our channel, please do subscribe to our channel and check out our earlier videos. In today's video, we will quickly discuss about another delta neutral strategy, short straddle. In our earlier video, we have discussed about short strangle and its adjustments when market moves out of our control, like how we can adjust our short strangle we have discussed in detail. Please do check out that video if you are coming first time to our channel. Okay, let's quickly discuss about short straddle. So we'll discuss and learn about this straddle while walking through an example. So for that, I have taken August month expiry, and we will be entering into the straddle on first day of that expiry. So July 26th at 9:30 a.m. we will be entering into the strategy. And let me. This is monthly. We are talking about monthly options and monthly expiries here. So we'll be taking 29th August as our expiry. So for that we will be entering on July 26th. Let's though in short straddle we'll be taking we'll be selling one put option, one call option, which are at the money. Whereas in the short strangle we'll be selling out of the money options. So here we will be selling at the money options. So I'm selling one call option and one put option. Both are at the money options. And if you look at their delta, they are almost identical, and the variance in the delta will be very less. That's why we call this strategy also called delta neutral strategy. And similar to the short triangle, we will be checking out this Greek's delta value. So in short triangle, we'll be whenever the delta variance in the delta crosses 0.3, we'll be doing either adjustments or we'll be making a decision based on the number of days till the expiry. Similarly, here instead of 0.2, but we will be going for 0.5. Uh, the variance in the delta gets very fastly get changes in the short straddle because the options which we taken are at the money option. So one of the options immediately goes into the in the money option. Let's say market moves 100 points higher, then the CE will always be in the money. If market goes down, then the PE will be in the money. So one of the option will be in the money, one will be the out of the. So this will be like little bit high risk strategy. Because of this nature, one of the leg will be always in the money. So it will become very difficult when really market moves a bigger move. So the ideal time to trade this strategy is when there is a high volatility in the market and you feel market may not make a directional move. And also the best time to trade into the strategy is like when there is a big event happening in a and the market will be very highly volatile in that period of time. It does not make decision to go in any one of the direction, but immediately close that straddle after the outcome of the event. Generally, at that point, because of high volatility, the premiums of that options will also be very high. And here, I'm not going into the event-based trading. So here we'll be considering every month how we can trade this short straddle. So we have entered the straddle now at 9:30. So we have sold one call option and one put option. Let's see how we can manage these positions. So I will be as similar instruction. We'll be monitoring every day at end of the day. So at 3:50. So we are at 3:50. So the market has really moved a lot from our spot. So we are in a huge loss on the first day itself. But don't pride and don't close the position at this point. The reason like our we are still in control with our delta and there is no need of any adjustments here. Let's move ahead for next day. Yes, the delta is still in control. Market is staying there. Yeah, see one more day. Yeah. So the market has retraced from that point and the delta also came down so that our loss will also come down here. Let's go further. Okay, it was make a big move again. So that's a volatility. There is a huge volatility here. You can see market make a 300, 400 points upside, then came back to the center and then followed for another 400 points. So when this is happening, like premiums goes up. So generally what happen, even if market comes to the center in couple of days when you enter into the trade, you will see some loss because of the volatility, the premiums going up. But once that volatility gets over, volatility gets over, then the VIX generally gets come down. So as the premiums will also come down. So let's see what will happen. Our Greeks are in control. Yes. Always keep an eye on this Greek as on the delta value as well. Okay, so the market is coming to the center point again. So we are making profit now. Let's go further. We don't do any adjustments until unless one of CA the last what is the delta value is still in control. Mm, I think we have made a really good profit here if you see. So we have 7,000 profit here. So both the legs here are giving us the profit. So this is one of the good way of exiting from this strategy with a profit. So don't always look for this maximum profit, which generally don't come. The reason is like that it is very less chance market closing at exactly at the center of this strategy. It happens very rarely. So don't always wait for this maximum profit. Unlike in straddle, unlike in strangle, there is very less chance we will be getting this maximum profit. So always keep in mind that don't wait for this one or till the end of the expiry. So when you see it's a nice profit actually 8.7%, 8% in couple of months on what we used as a margin. So I think it's a good profit to exit. But let's see, we'll go till 1 week before the expiry. So if you're coming first time to our channel, like in our earlier videos, strategies also we have discussed. We will not trade, we will not go enter into the last week of the strategy. So in this expiry, 29th August expiry. So from 23rd to 29th, we will don't trade this strategy. We'll be managing the strategy till 22nd August. So the last week we will not trade because when market makes a bigger move, it's really difficult to adjust the positions. So we'll be exiting the strategy before 22nd August itself. So here, here it is a very good profit because we can exit the strategy. And people who are conservative, they are new to these option tradings, they can easily exit from this one and they can take positions for the September expiry. And people who can take little bit more risk, they can go for another 1 week. Let's go for it. Okay, let's check the leaks. I forgot to check for last 2 days. Let me check for that. So it is under control here. Okay, okay. So if you see the delta, the variance of the delta between the two legs has increased to 0.5 now. So this gives us the signal that market is moving away from the other money, and I think we have in the earlier days of this strategy, we have seen that market has made bigger move like somewhere here till here too, but the delta variance is not that much. This is another reason like when we are going closer to the expiry, the delta values will also get the variance in the delta also will be increased very fast. The reason is when you understand what is a delta, then you will when that defines that the rate how that premiums values get changes. So one of the leg has 0.23, which is very far out of the money, but one of it will become very deep in the money. If market makes another 100 points move from here, then you will suddenly see the entire profit will wiped out. So this is the right time to exit from this strategy. And also it also reaches our one another rule, like we don't trade into we don't do any adjustments or go into the trade for the last week. So this is the right time to exit from this trade. What if, okay, this one is given a profit to us from the starting, except for the first 3 or 4 days, this strategy was in the profit zone. What if it market makes a really big moves in the earlier days? Then if you see in this strategy, the first 3 days market is making 300, 400 points upside, downside, and then coming back in the middle. So it gives us that flexibility. If market was in a volatile mode, we don't need to be worried. Only we need to worry when market is moving in a direction. So we'll take another example in our next video. If market moves in a directional from the starting day, how we can adjust our strategy and what are those adjustments and how we can come out with a minimum loss or convert our losses into the profit. Please do check out our channel for the upcoming videos. If you like this strategy and information, please do subscribe to our channel and like this video and share it with your friends. Thank you.